is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hey everybody, this is Alex Tapscott. We're going to get to our interview in a second with Bitwise CEO Hunter Horsley, but I thought I'd just jump in here really quickly because this episode was recorded on Thursday, May 23rd around noon. And events may have changed since the time of this recording. In the subsequent hours, we've had a big decision from the SEC to approve all of the Ethereum ETFs that have currently been filed. It doesn't mean they'll start trading right away. Most analysts predict that that'll take a couple of weeks. But this is nevertheless a huge watershed for the industry that took a lot of people by surprise. At the beginning of the week, the expectation was maybe a 25% chance that this would get approved. And within a couple of days, it seemed almost certain that it was going to happen. And it seems like it's part of a much bigger shift, which Hunter and I are going to get into in the discussion. So the whole discussion is completely relevant and in many ways kind of timeless. And I'd really encourage you to listen through right to the very end. We do talk a little bit about the Ethereum ETF, but because Bitwise is one of the companies who had an active filing, he didn't really want to share too much for obvious reasons. But the company is one of the pioneers in the space, $2.5 billion in their Bitcoin ETF, the first and only to publish their assets on chain. And they'll be one of the handful that has put their hats in the ring to launch this Ethereum ETF. So super topical, awesome discussion. Can't wait for you guys and girls to get into it. Please enjoy, listen up, and we'll be back with more great content next week. Until then, take care. Thanks. Hello, and welcome back to another episode of DeFi Decoded. I am Alex Tapscott. Ethereum, the $500 billion crypto platform and arguably Canada's most successful startup ever, got a big boost yesterday on Monday rather, as US regulators signaled that they may be close to approving a long-awaited Ether ETF, which sent the price of Ether skyrocketing and set off a frenzy on crypto Twitter and elsewhere. There are 10 Ethereum ETF applications from issuers including industry heavyweights like BlackRock, Fidelity, Invesco, as well as firms like ARK21Shares, Bitwise, and others. How significant could this be? Well, the US-based Bitcoin ETFs have gathered $12.9 billion in assets since their launch in January, making them the most successful ETF launch in history. That's at least according to most analysts. And we know from our experience in Canada that Ethereum ETFs, when launched in 2021, grew to nearly $1 billion in less than a year. It was less than the Bitcoin ETFs, but about 25% of the AUM on a relative basis. Standard Chartered estimates that Ethereum ETFs, if approved, would gather somewhere between $15 and $45 billion of inflows in their first 12 months. That strikes me as a tad aggressive, but even at the low end of that range, it's obviously going to have a very meaningful impact. Why is it important? Well, for one, there's not that much ETH out there. ETH balances on exchanges are at an all-time low. A lot of ETH is tied up in staking. And this demand could cause a price squeeze similar to the one that we saw with Bitcoin. But it's also a big step forward for the asset class, could accelerate the adoption of Web3 and crypto by just making it easier for institutions and everyday investors to own the asset class. So this is a very interesting time. It comes at a moment when it seems like the political dynamics in the United States have slowly shifted, or maybe dramatically shifted, at least recently, away from a position of hostility or indifference to one that seems much more accommodating. So it's a perfect time for the conversation we're having today. We're very, very fortunate to have Hunter Horsley, who's the CEO and co-founder of Bitwise Asset Management. Bitwise is a Bitcoin and crypto specialist asset manager. They've grown to $3.5 billion in assets under management and have offices in San Francisco and New York. Bitwise manages over 19 investment solutions spanning ETFs, separately managed accounts, alpha solutions, and private funds. The firm serves over 3,000 wealth teams, RIAs, family offices, and institutional investors, and it's known for its research and a 7-year track record of excellence. From personal experience, their year-end report, where they make several prognostications, is required reading for anybody who's serious in this space. The team of more than 60 professionals combines expertise in technology, asset management, and have backgrounds that span big tech, Wall Street, and the world of crypto as well. So they are a firm that I think helps to sort of straddle the world between traditional finance and the world of crypto. And Hunter's done an incredible job building this business. He's also one of the many firms, as I mentioned, that has an ETF filing this week with regulators to get an Ethereum ETF approved. So we're very fortunate that he's carved this time out of his schedule to join us. Hunter, tell us about, thank you for joining the show, and tell us about your week. It must be like you've been drinking from a fire hose.
It's so fun to join the show, Alex. Thanks for having me on, and love what you ran through there. It's been a fascinating week. We have a live filing for the Bitwise Ethereum ETF. So there are limitations to what I can say, but what people can see publicly is that on Tuesday, us and many others in the U.S. Filed amended 19B4s, which is one of the two filings for an ETF here in the U.S. And I think that public commentators have observed that there's a lot of work underway now. So it's been a busy week, and we're excited about the potential for Ethereum ETFs to arrive in the United States.
Well, it seems like this Ethereum ETF about face, I guess, from the regulators has caught some people by surprise. The Bitcoin ETF was kind of well telegraphed in the sense that, there was these analysts, they were tracking the progress by issuers, the back and forth that they were having with the regulators. We actually had James Seyfarth from Bloomberg on the show back in, I think it was March. And at the time, he had the odds of an ETH ETF happening by May. I think it was like 50-50. And then shortly after that, they downgraded it to 25%. And basically, his argument and his colleague Eric Balkunis's argument was that no news is bad news, right? That basically, if you're not hearing anything, like radio silence from the SEC suggests that they're not really engaging, in an authentic way with these issuers, and that probably means that there's going to be a delay. We've always maintained a slightly different point of view, and that's largely borne out from our own experience in Canada with the Canadian Bitcoin and Ether ETFs, which is that a lot of the questions that got answered in Canada with the OSC, which is our regulator, with regards to the Bitcoin ETF, applied to the Ethereum ETF. Custody, trading, cybersecurity risks, and other concerns. Like all of these things are kind of like copy paste, for lack of a better word. And so, I know less than James and Eric do. Like they're following it day to day very closely. But there was this part of me that was thinking, maybe this is going to be easier than people think, because a lot of the work that was done with Bitcoin still applies to ETH. And then I've heard another point of view, which is actually this is all just political, and this is a recent turn of events that has to do with the election. So I don't know. Like, do you have a point of view on that issue?
Yeah, it's very hard to say. I would say that James and Eric are fantastic. There are a number of public commentators who try to interpret the public information, and then they ultimately express that as a percent likelihood bet. And I think that they, as you said, went from 50-50 down to 25% chance. And this week, I think re-rated up to 75% chance. So I always find both of them to be very, very, very savvy. As far as the driving forces here, it's very hard to say. I mean, Alex, we have the fortuitous circumstance of speaking today, right in the midst of it. But what I can say is that it is absolutely remarkable what has happened in the U.S. Congress over the last few weeks. Just yesterday, the U.S. House of Representatives voting to approve a bill that introduces a crypto regulatory framework called FIT21, landmark piece, and supported on a bipartisan basis, which is remarkable. And in the week prior, the Senate, on a bipartisan basis, 60 votes to approve a resolution to overturn a staff accounting bulletin or rule called SAB 121. So there's a lot that's happening in real time in Washington right now. And it's hard to imagine that doesn't inform the context in which Ethereum ETFs are being evaluated. But, you never know for certain exactly what's at play. So we're navigating it in real time.
Yeah, I think as we all are. What do you think accounts for the change of tone? It's not that a lot of people are saying everyone's changing their point of view. To me, it's more like it seemed like there was a stasis of sorts. Things weren't really moving forward, and then all of a sudden there was momentum. Right? It's like what happened that sort of has got everyone now trying to figure out how to regulate or develop policy around this industry when there seemed to be kind of little interest for a while there.
Yes. This is really one of the most exciting things. I think Bitwise puts out a lot of research. Our CIO writes a weekly memo, and we've called 2024 the year that crypto enters the mainstream. If people are familiar with the technology adoption framework of crossing the chasm, there's this moment where something goes from the people who are willing to deal with headaches to participate in the new technology, the early adopters, and it jumps this chasm where suddenly a huge chunk of the market and of the public engage with the new technology. And I think that's happening in 2024. And I think a key piece of 2024 being the sort of beginning of the mainstream era of crypto is what you're seeing in Washington. I think that over the last 2 or 3, a lot of people have an impression that US lawmakers don't like crypto. And that is primarily informed by in particular, 1 or 2 critics that are very loud about their opposition and disdain for the space. What hasn't been as obvious to the public is that there are many in Congress and in the Senate that are well informed, have a very constructive view on crypto developing in the US. They like its contribution to GDP. They like being a leader in technology innovation. They like that it's an open platform, which means opportunity for all. They like that it can project strength of the US dollar around the world. So They like those elements, but they haven't been as vocal. And so whoever's writing the piece in the Wall Street Journal, whoever's going on television and talking about it thus far have been on the critical side, but they are not the majority. And I think that these votes have been so remarkable in that it's revealed what has already been developing, which is a lot of support and conviction for establishing a constructive environment in the US amongst US lawmakers.
Well, it's interesting because back in 2019 to call it 21, a lot of people in DC were saying that this was one of the few areas that seemed to have bipartisan support, that there were people on the right side of the aisle who liked the idea of economic freedom, of people being able to custody their own assets, of being able to, reduce the reliance on government and so forth. And then people on the left talking about economic and financial inclusion and how this helps with, remittances and all the rest of it. And reducing the power of big banks, which has always been a big bugaboo for some people. And then things kind of changed and it got kind of choppy. And now it feels like that consensus, maybe it's not back. It's not like we're back, baby, but it's, what was interesting about these votes, as you described, is that they had broad bipartisan support, especially the Fit 21. I mean, that sailed through the House. Like it wasn't even close. Now, we have some Canadian and international viewers who probably don't know exactly the minutia of the US system. That doesn't mean it's law yet. There still has to be a vote in the Senate, and the Senate might come back with changes, and then it's got to go to the president and all the rest of it. But still, like it's a huge signal, right, to the industry that maybe the US is open for business, or at least thinking about this kind of stuff.
I think that the point that you just made is sort of the underpinning secret here, which is in the US, based on polling that's been done, it's estimated that north of 50 million Americans amongst the 300 million plus own digital assets and care a lot about it. And they poll at a third Democrat, a third Republican, and a third independent. Wow. If you are a politician, the playbook or the calculus you have to run, particularly around elections, is how do I, while not alienating my base, reach across on an issue and win over some voters from the opposing party or independents. And there are very few issues these days that a politician can use to attract voters from the other party while not alienating their own base. And I think politicians become wiser and wiser, as you said, Alex, to crypto as an issue that that is bipartisan in nature. And so by being the first to recognize that, they have a real advantage. Whereas most other issues have become very polarized in the U.S. I was having dinner with an individual who's running for an office, and this was exactly his calculus. He's been invested in crypto, constructive on crypto for years, but only recently did he realize that it is also very productive relative to running a campaign to speak more publicly about it and affirmatively about it. And I think that there are lots amongst Congress that have realized that over the last 12 months or so. And then, of course, there are groups within the U.S. That are working, sort of doing the invisible work of educating Congress about those things, not just how the technology works, but how to think about this as an issue relative to other issues that they contemplate in their campaigns. So I think that substance is very strong. That is a compelling force that will continue to drive the trajectory of support within Congress. And I think that these votes are just sort of a snapshot in time of how strong that support has become.
Yeah. The other thing too that I saw from polling data was that I might get the number wrong, but something like 1 in 5 people in swing states viewed this as one of the most important issues, or like an issue that could decide who they vote for. And
isn't that remarkable?
That's something that would cause a lot of folks to perk up, I think.
Yes.
And the other thing you mentioned too is a third Dem, a third Republican, a third Independent. I don't know what the data says overall, but I'm pretty sure that fewer than 1/3 of Americans identify as independent, right? So like you basically have and independents are the ones that everyone's trying to go after because they're the ones who could swing the election. So not only is it a big chunk, but actually it's a big chunk of like eligible voters who could actually move one way or the other depending on how one party's positions on the issue.
Yep, absolutely. So I think the fundamentals are there from sort of a political perspective, and I think we're now at the moment where the rubber hits the road on that. And I think to zoom way out, for many investors who've looked at the space for years, we do a survey every year. We publish it. We've done it for 6 years of financial advisors, and one of the questions we ask is, what are things that give you hesitation or concern when engaging with this asset class? And the number 1 or number 2 issue for years has been regulatory clarity, understanding what lawmakers think about this space. So the fact that this is now becoming clearer, and the way in which it's becoming clearer is that there is a constructive view, I think can allow this space to start moving a lot more quickly, because that's not just one of the issues. That, for many traditional investors, has been the main issue that has had them feeling like it might not be something that they can engage with. I think that as an analogy, crypto has sort of felt to people like if the milk in the grocery store was not regulated. You can go down the dairy aisle, but you have to fend for yourself and try to avoid the spoiled milk. So you're Googling for what does spoiled milk look like. You're looking for curdled milk, and everyone would really just prefer if there was a label and there were standards, and you could grab any jug off the shelf and know that it was good milk. And so I think that it is very constructive to the space to be regulated, to have that clarity, and will enable a lot more investors to engage with it versus having to be fending for themselves. So I think it's really constructive. I think it's not just a issue. It is one of the most important issues, and it's probably hard for people to imagine, but I think that it's going to be a catalyst for the space, that regulatory clarity will be a catalyst as opposed to previously, I think they've thought of it as a risk.
Yeah, no, I completely agree. I mean, the other thing too is that, the US has historically been a leader in a couple of key areas, including financial services and technology. And so this is an industry that weds those two things together. So it makes sense that they'd want to be a leader as well here. Yeah, you mentioned one thing as you were just rattling off all the benefits for the technology and why politicians might support it, of helping to sort of export the US dollar. And that's something that we've talked a little bit on the show, the idea that, stable coins, which really are one of the first killer apps for blockchains and tokens, are not marginalizing the dollar. They're actually helping to export it and make it more useful in different parts of the world, right? And I've always found that to be a much more interesting and more compelling argument. It's very positive sum. And even you saw Paul Ryan and a lot of other people in and out of government who have been talking about this as something that's not a threat at all. It's an opportunity. And that opportunity mindset, I think, is what seems to be finally grabbing people and taking hold. And I think obviously that's something that should be celebrated.
Yeah. I would also say that it's not as novel of a journey as it kind of sounds like. Most technology goes through a journey like this. If you think back, I'll just use a recent example to Uber. In the early days of Uber, people said it's not safe to get in a stranger's car. And then it became very popular. And people said the cities are not going to allow this because they need to support the taxi companies. And indeed, I went to school in Philadelphia, and there was a time where the city would impound cars. If they found out that you were an Uber driver, the PPA would impound your car. But it was so beneficial to consumers, to drivers as an area of job creation and income that they recognized that and they changed the rules. And that created took a thing that was a risk and made it into a bedrock or a foundation that has supported the incredible growth of ride sharing. And so I that's just one example, but I think that there are many examples in technology where at the beginning things are looked with apprehension, and over time work has to be done with lawmakers, but in many instances can then traverse that stage and wind up in a very established and productive place. So I'm glad that it's happening now with the crypto space.
Yeah, absolutely. Well, in a lot of the research that I've done for the books that I've written and the podcasts we've hosted and so forth, I've gone back and looked at how regulators and governments and people in power, vested interests, viewed new technology when it emerged on the scene. And when the first automobiles hit the road in Victorian England in the late 19th century, they introduced these things called red flag laws that basically required every single car, they were called self-powered locomotives or something at the time, required two people, a driver and a red flag man. And the purpose of the red flag man was basically to walk in front of the car waving a red flag and saying, here comes the car. And the whole idea was, cars are something that will startle horses. And so we need to let the horses know that the car is coming. So it's sort of accommodating the new technology with some kind of solution or approaching the new technology with a solution that accommodates the old way of doing things. But in so doing, kind of defeats the purpose of a car. Like a car is supposed to be something that helps you get around quickly and
faster than a person carrying a flag.
Faster than a person carrying a flag, exactly. And even during the first era of the internet, like in the 90s, first era of the web, there were some people who said, if you launch a website, you have to get a CB radio license because you're a broadcaster, right? So all these different approaches where people only had the old paradigm to try and fit this new technology in. And I think the same thing is true with digital assets. Like some digital assets are securities, obviously, but many of them are not. And we can't just say that all digital assets are securities. So we need to come up with some kind of new framework that allows us to manage the growth of this industry responsibly, right? And not sort of kill the what makes it so dynamic and so interesting.
I totally agree.
So just let's talk a little bit about Bitwise and your background. So you're someone who, you mentioned Philadelphia, you went to Wharton, did an undergrad there, then you went and worked in the technology industry for several years, and you started Bitwise in 2016. So I was around back then, but most people were not. What was it that struck you so early on about this asset class that made you want to start a new company, given the fact that you had that sort of a very enviable traditional kind of career in technology?
Well, because you are prolific author and I love you mentioning the red flag laws. I'll mention that I was the teaching assistant for history of business in America in college. And so I had the opportunity and loved studying sort of the chapters of innovation in the US.
Yeah.
And if you do that, the thing that becomes obviously apparent is that the only constant is that things will change. And the question is not, are they done changing? The question is, how will they change, or where will they change? And so that's sort of my operating mindset. And then at Facebook, I had the opportunity to see a few things that I think calibrated me to appreciate the potential of blockchains. At Facebook, incredible scale, billions of users around the world, only possible because of the reach of the internet. At the same time, Facebook grappling with how fragmented the technology standards of the world are. If you want to do anything more than send text and images and read things on the internet, if you want to do e-commerce, if you want to do financial services, and you want to do that globally, you have to interact with 170 different currencies, 170 different languages, 170 different financial systems, 170 different bodies of law, 170 different norms, and so on and so forth, which is a real challenge of the internet as it's developed, 20 or 30 years in. And then the third thing that Facebook is partially responsible for, you could witness even when I was there, was that the growth of social media and ways for people to publish their own experiences and their own perspectives, aside from the nightly news or cable television, meant that suddenly people were seeing a broader picture. And as a result, we're losing confidence in the things they were being told. We're losing confidence in political leaders and business leaders because they started to see a much broader aperture that contradicted some of the things they had been led to believe. So you have the incredible scale of the internet, but you have real challenges around standards and fragmentation. And you have a public that is now learning more and losing trust that leaders will do the right things for them. And then along comes Bitcoin on the heels of the great financial crisis, which leverages the scale of the internet, creates one global standard so you don't have fragmentation, and it gets rid of the corporate leader by establishing a consensus mechanism so peers can interact directly. And from my vantage point, that is a remarkable innovation. It doesn't mean that it's guaranteed to change the world. It doesn't mean that the risks aren't real, but it has the potential to be a meaningful way that the coming decades are different and better in the 21st century and the internet age that we live in today than the prior decades. And my mindset is that the world will continue to change. And the question is, what are the vectors that make sense and will have an impact? So that drew me to the space. And you were there in 2016. It's hard to believe that the space that we contemplate today in 2024, it just looks so different than back then. It was, I think in the US, there were maybe 500 people working full-time professionally in digital assets. Coinbase was the largest employer, but it was a very small industry. There was not the sort of set of counterparties and market structure we have today. Liquidity was smaller. Ethereum was a $10 billion market cap asset that was a new idea launched 12 months prior. And certainly Congress was not voting on a bipartisan basis to pass regulations to support its development. So it's come a long ways, and I think that the progress has positioned it to where it is in 2024, which is to cross the chasm and finally enter into the mainstream. But those are some of the things that drew me to it. And I think there's some of the things that draw investors to it today as well, who say, the 60-40, the companies or the view on fixed income that has gotten me here may not be exactly the same to get me there. And what are the ways in which the right portfolio or investment opportunities will shift? I think a lot of people have an intuition that alternatives, things like digital assets, have a role to play relative to that. And it's drawing more and more, I think, investors to engaging with this asset class.
Yeah, no, I completely agree. The analogy that I use when I'm talking to people is to say, in the 1990s, there were a lot of really great companies that people said you should own in your portfolio. You can go back and look at what Wall Street was recommending at the time. Companies that have been around for a while, they had great customers, good products, and so forth. Companies like Macy's and Kodak and Polaroid and J.C. Penney
That's
and
right.
Xerox and the rest of it. And what all those companies had was kind of a blind spot, which is that, and hidden in that blind spot was the internet. The internet was about to have a big impact on their business. And so today you sort of look at the world and you're like, there are a lot of big companies, tech companies, banks, and so forth that appear to be incredibly powerful, strong, profitable, and so forth. But maybe they have a blind spot too, right? Maybe there's a weakness there, and it doesn't mean that you want to sell your shares of Google or JP Morgan, but maybe you want to add some exposure to things that could be big drivers in the future. And today, what's interesting is that there are there are plenty of companies that give you exposure to that, but a lot of the value creation is happening at the crypto asset or protocol level. And you just have to look at the market caps. Like Ethereum is bigger than the combined market cap of every single public and private company in Web3, right?
Right.
There's value that's accrued to the platform, and now you have a way to own it. In Canada, you've been able to own this stuff in ETF wrappers for years, and now it looks like we'll get something similar in the US with Ether too. So that's how we think about it. It's like the 60-40 portfolio, and for people who don't know, that means like 60 equity, 40 fixed income, has been kind of obsolete for a while, but I think nowadays with the rise of this as one of the alternatives, it's becoming ever more like a limiting way of looking at the world. So I love that as a way to approach it. One other thing I will say about Bitwise is that you guys were one of the first, or I think the only one, to publish the wallet addresses for the Bitcoin that you've purchased, which I think is really great. It's basically trust and verify, right? It's like you don't take our word for it. Here's the blockchain, an immutable ledger of ownership of assets, where you can see with 100% confidence and total transparency that the Bitcoin that we say we hold on behalf of our unit holders is actually in wallets that you have a claim on. And I just think that's very cool, because it's helpful in teaching the advisor community and the mainstream investor community, like, what is the point of all this? Like, what is the underlying benefit? And one of the benefits is, speed and reduction of friction and so forth. But it's also this idea of a trustless state, where you've got, perfect visibility into how markets are working at any point in time.
Incredibly well said. Yeah, I think that our aspiration is to bring the opportunities of the space into the traditional financial system so that people can invest through a retirement account, a brokerage account with their advisor. But we don't want to shed the fundamental features of digital assets that make them remarkable in the first place. And as you said perfectly, Alex, one of the things that is so compelling to people about Bitcoin as a ledger is that it's public. You can view all the balances, all the transactions. And so as we thought about putting Bitcoin into an ETF, we said, why can't we keep that attribute and introduce that to an ETF for the first time, allow people who want to see that the Bitcoin is there to see it at any time. We publish that on our website. We're the only ETF to do so, and we're really proud to do so. So yeah. I also think that that's Bitwise's role. We only do one thing as a firm. We partner with investors to help them understand and access the opportunities in this asset class. We spend a lot of time with developers in the space, as well as on the investment management side. And there are different roles for different players, but I think our role is to be really immersed in the frontier of what's possible and becoming possible, and to bring that to investors versus sort of having it as a side project or a side initiative amongst 1,000 other things. So we strive to do that. Another thing that we did with our Bitcoin ETF, the Bitwise Bitcoin ETF, is we created a program where we donate 10% of the profits from that fund to open source Bitcoin development organizations, 3 of them. And the reason behind that is when you invest in Bitcoin, you're investing in an open source software project. Some of the audience may be familiar with Linux, but it's a code base that is not owned by a company. It's contributed to and maintained by a group of independent developers. And there needs to be resources for that group to continue to keep it up. And I think it's in the best interest of anyone who is investing in that software by taking ownership of Bitcoin or Ethereum, that the software be maintained. And so we make it simple, whether investors know it or don't know it, they are stewarding their own investment, not by being higher fee. Our Bitcoin ETF is 20 basis points. It's among the lowest fee out there and has billions in assets. It comes out of our portion of the fees, but I think is constructive to what investors want if they become investors in these open source projects. So those are examples of things that we try to do to not just use the analogy of equities, but to bring the unique things about digital assets into the familiar accounts and brokerage types and things like that for investors, but not to have them lost in the transition.
Yeah, well, perfectly said. And it's important work that you're doing. And I think if you're a person that's interested in owning Bitcoin and you're in the US and you want to own it in a competitive structure, it's low fee, but also have some of the money go towards supporting the ecosystem and have it from a firm that really understands this stuff, take a good look at this Bitwise product, because I think it's really terrific. Hunter, we could keep going. I have like 10 more questions, but why don't we have you back maybe in a few months' time for a recap of things where we're headed. But this has been such an amazing discussion. We really appreciate you taking the time in what we know is an incredibly busy week for you and an exciting week too. And probably by the time this episode is published, we'll know one way or the other where we're headed on the Ethereum ETFs, at least in the short term. I'm certainly optimistic, and we know that it's in large part because of the pioneering work that you and other firms like yourself are doing. So keep it up, and we look forward to chatting soon. Thank you.
Thank you very much, Alex. And yeah, maybe next time we chat, we can chat about what happened.
Sounds good. All right, that's it for this week's episode of DeFi Decoded. I'm Alex Tapscott. Thanks for joining. If you like this episode, make sure to follow us on Spotify, Apple, or wherever you get your podcasts. Leave a review, drop a like, share the episode. It helps other people find us, which we're always keen to do. Thanks a lot. See you next time.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.